Good morning. Having a few internet issues here.
How are you?
Yeah. Anyway, good morning, everybody. Thanks for joining us. It's the 11th of April. I'm Joe, joined by Steve this morning. How you doing, Steve?
Yeah, very good, thanks, mate. Yeah,
Nice
looking
long
forward.
weekend.
Yeah, nice. Yeah, so we've only got a short week.
Mm,
Yeah, let's get rocking and rolling.
indeed. Let's, as usual, get into the latest headlines of what's moving markets. Have a look at the charts and have a look at the gun to the head challenge as well. And yeah, if anybody's got any requests, please feel free to send them over and we'll do our best to cover as many markets as we can. So first up, the headlines. Let's get on with these, shall we? So the US payrolls increase meets expectation on Friday, despite most of Europe being off. We did have non-farm payroll numbers out. That came in at 236,000 for March and close to the market expectations, while the February increase was revised higher to 326,000 from the original reading of 311,000. There was another strong increase in the number of government jobs of close to 50,000, but the increase in private payrolls was below expectation at 189,000. We've also seen earnings growth slow. The average hourly earnings increased 0.3% on the month, which was in line with the consensus forecast, with the annual increase slowing to 4.2% from 4.6%, which suggests that overall wages growth was moderating slightly. As a result of all of this, we saw a shift in the Fed expectations. Following the jobs data, there was a shift in the Fed's fund pricing, with markets pricing in around a 70% chance that the Fed would increase rates by 25 basis points at the May policy meeting. The Bank of Japan have been active as well. They warned against rapid policy move. The new bank governor Ueda stated that there was no immediate need to change the joint monetary policy statement with the government. He added that the central bank wanted to avoid a sudden normalization in monetary policy, as it would cause a big impact on markets. The yen lost ground as a result of this dovish rhetoric and helped support the dollar and undermine the yen, with dollar yen hitting a 3-week high around 133.85 before correcting. And we've got the Aussie dollar dipping as well during the holiday period, with significant geopolitical concerns as China carried out extensive and provocative military exercises around Taiwan. Stronger than expected domestic data provided an element of relief on Tuesday. It also announced that, that Australia would suspend its WTO dispute against China over barley. So yeah, a few geopolitical things rising again as a result of China and Taiwan, which is not what we wanted to see. But anyway, let's get into some charts. Steve, do you want to kick us off with cryptocurrencies? We'll have a look at how things are shaping up there.
Yeah, of course. Let's take a look at the weekly chart on Bitcoin, which is really making a hard push through this band of resistance that we've got all the way up to 32,500. Trading just above the 30,000 mark at the moment. We've actually been up to 30,438 on this chart. As you can see, the reversal seems to be confirmed by a break of the neckline at 25,500. And it's like an inverse head and shoulders formation. So let's get rid of the major one that we have been going on about for a long time. And let's see what sense we can make of this inverse head and shoulders formation. Quite a clean one, in fact. Excuse me. We've already got put on here the measured move target all the way up at 35,000. So that's marching steadily towards it. We're halfway there. It broke the neckline was 25,000, halfway there, just above 30,000, on the way to 35,000. So it looks pretty good. And also that'll be some good horizontal resistance, as there was support there previously. So that's looking pretty tasty this morning. Ethereum also reacted higher from this upward trending support line as well. So, but we haven't managed to break that heavy resistance that we formed around 8th of August, the week of 8th of August last year. That comes in at 2031, only about 110 points away, so not far away. XRP is also knocking against resistance from September last year, that week, where it got up to 55.80, that cents. We did manage to breach that level the week of, well, a couple of weeks ago, and then reversed sharply. Bit of a down week last week, but we're on the front foot again today. 52.5 cents trading, resistance up at the 58.5 cent level. Above that, then it really opens up, and we can sort of like see the next real level of resistance, quite a pivotal level that was there before, was around about the 79 cent level. So looking quite positive to start the week with cryptos. How commodities getting on? Gold has been really moving about and bit wild really over the last few weeks. From a positive perspective, it's moving higher, and last week the highest point we got was $2,032. This we reversed sharply towards the end of the week, but we managed to have found some support around about the 1981 level. There's further support down below that, but we'd say that 1980 down to 1960 should provide some initial support on the short term after this decent rally we've had in gold. Crude oil has remained on the front foot. Obviously, there's the threat of the OPEC plus nations cutting supply. That's led to a really sharp, aggressive move higher. We seem a long way now from the lows of 64.33 and the WTI crude oil. We're all the way up. We're about $16 higher than that over a space of just 2 or 3 weeks. So that's looking, we're banging our head against this resistance level all the way up here. So from the WTI perspective, that's coming in around about the $82.5 to $83 area. Brent crude oil, the resistance comes in around about the $89 level. We're sitting about $5 short of that at the moment. There is still Brent crude is still trading at a premium of about $4.20 to WTI crude oil, and that gas seems to have found that support around the $2 level. $2.06 we got down to, in fact, last week, and this week we're already off to quite a positive start, trading at 2.25 on this chart. So looking, yeah, quite nice for the natural gas as well. So are we forming a bit of a bottom here? Potentially, yes. We'll get Joe to take a look at the dollar, and then we'll dive into a few indices to finish off before we go into the gut ahead.
Thank you, Steve. Okay, let's take a look at the dollar then. So we can see prices here over the last couple of days have pushed nicely higher, 4 consecutive days of gains going by the daily chart, and it appears as though we may have formed some sort of ending wedge formation here as well. We have found support in front of this 101.30 level. So we've broken through this short-term downtrend. We can see here there are more than 3 touch points, which give us a viable downtrend. We closed above that yesterday, and we're trying to give some of that back this morning, down by 0.25% as things stand, but providing it holds maybe around here, maybe slightly lower to retest the broken side of this wedge, then maybe we'll see some further buying action. There is still resistance here. The gap that was created on the 28th of March, which was then filled on the 3rd of April, has pretty much been touched again and done another job as resistance. So we also need to see a break through that level before we can get more excited about further dollar strength. So for now, the trend still remains bearish on the longer term picture, but potentially forming a sort of bottom here, which could lead to a corrective move to the upside. So a bit of a mixed picture here on the dollar index. I think my bias would be maybe for higher prices in the short term, given that we've seen the break of this wedge and we seem to be finding some support around 101.30. Let's take a look at how that's shaping up for Euro US dollar. We can see here that there's been 2 consecutive negative days on euro dollar. We found resistance around 109.42. Prices have stalled into that region. Arguably, we could probably make a case for there being a bit of a wedge here as well. Not quite got enough touch points on that, or maybe we have if you include that candle there from Friday to see that we've had a short-term break of a trend, which may trigger a corrective move to the downside. But we are doing our best to engulf all of the losses that we posted in yesterday's session, which is quite encouraging. And it may be, in fact, that we are forming a bit of a continuation pattern here, maybe, if we get a decent break to the upside through yesterday's highs. So again, a bit of a mixed picture. Obviously, going by the longer term trend, we can see that prices do remain in an uptrend for now. We do have significant resistance here at 110.32 that we need to overcome. And if we do, then we can start looking for higher prices up towards 112.75. So short term, a bit mixed for me on Euro US dollar, but given that the long-term trend still remains positive, I think that probably is where we need to stick with from a bias perspective for now. Looking at cable, we can see here that prices made new highs last week, but then dipped back down 4 consecutive days of losses, but potentially forming some sort of continuation pattern here. A very shallow looking maybe flag pattern here that's forming on the daily chart. Looks to be wanting to break through yesterday's highs, which maybe would trigger a further push to the upside towards that resistance level we've got up above at 126.66. So that's looking pretty decent today, actually. Obviously, a little bit of an overshoot of this, what was previously resistance, which should now provide support. We have overshot that a little bit, but if we can get back above it today with a strong showing and maybe form some sort of short-term bullish flag, then maybe we can look for higher prices in the short term. Not many requests coming through at the minute, so I'll keep going with a couple of the other majors. Let's look at dollar yen. As we said, that made a 3-week high, and we can see here that prices potentially starting to push to the upside. We've got resistance up here at 135.93. Maybe a short-term double bottom forming here and pushing prices higher. So it's looking pretty decent. Let's look at dollar Swiss, see what's happening there. This is continuing to grind lower, although we did post a decent looking candle yesterday, but we're giving most of that back today. So that's still very much under pressure. Big support around here, around what prices have we got? 90.55 down to these lows we posted last week at 90.05. So if that starts to break down, then again, would suggest a continuation lower. Let's look at dollar CAD. A bit of a mixed bag here as well. Looks as though we are potentially forming a bit of a flag here, a bearish flag as well, which may break to the downside. So yeah, pretty mixed still really on these currencies. Let's take a look at Aussie yen because we've had a request there, and also sterling yen. So Aussie yen still looks as though it's trading in a downtrend to me. We've still got this kind of head and shoulders top pattern over on the left hand side, which for me is still active, still looking for that to play out. The measured move of that target over the medium term is it may actually be there. We may have already reached that target. Is that right? I don't think I've got a measurement on there, so let's get that done just to give us a bit of yeah, so looking down for 82.95 is a measured move of that head and shoulders top. Price is very choppy at the moment. We would traded in a channel which we broke down. We then traded in a wedge which we broke up. Price is stalled into a 50% fib level of this short-term down move. Yeah, still pretty choppy. I think my bias is still for lower prices here. I think ultimately prices will be capped into this region here, which is still, you know, a pretty decent move to the upside. But ultimately, and over the medium term, I'm looking for prices to get down to this kind of region here. Let's take a look at sterling yen. So sterling performing quite nicely at the minute. We saw a break of the downtrend here back on the 29th of March. And since then, prices have remained above that level. We've got a previous swing high from the 28th of February, which prices crashed into here on the 4th of April, posting that shooting star candle, and that provided some resistance. We're now back up to retesting that level again. So it'd be interesting to see what sort of reaction we get at that level. If we can break through that high that we posted there on the 4th of April, then that is likely to indicate higher prices towards this next level of resistance up here at 169.09. So looking pretty strong on sterling yen for the time being. I'll leave it there, Steve. We can take a look at some indices.
Okay. Let's start off with the FTSE, and it's been performing quite well over the last 2 or 3 weeks. We had this doji type candle the week of the 20th of March. Then we had the real strong reversal. So we had a bit of a morning doji star formation with these three candles here. Projected higher again last week and off to a great start today. We've already been up above the 7,800 level. Next real level of resistance, the all-time highs coming in at 8,046. We can go, if we go all the way back, we scroll all the way back, we can see that that's a really strong indice overall at the moment. DAX got a little bit of work to do, although it is trying this morning. We are above, well, trading close to the, I mean, last week we traded at the highest level we've seen since all the way back at the start of last year, January last year, that we saw these levels. So it shows you what a recovery it's made, especially from the sell-off we got from the week of the 20th of March. The reaction higher from there has been pretty decent. We've seen a nice nearly 9% rally in the DAX, the Germany 40. Across the pond on the US indices, we've got the Dow looking very positive indeed, moving higher towards the downward trending resistance. We could probably get an even stronger resistance level maybe if we took these 3 points here. That comes in all the way up at 34,170 and trading really nicely over the last 3 weeks. Again, really sort of strong reversal the week of the 20th of March, bullish outside candle, extension higher, and we've taken out resistance last week from the downward week of the 6th of March. Nasdaq, similar. We've got this double bottom formation playing out, which is quite nice and projecting higher. The measured move target for that is around about 14,000, just at that, around that level. And although last week's candle doesn't look so promising, a little bit of a hanging man candle, but we seem to have already this week, we've already tested last week's low and reacted higher from it. So that looks promising. And we've got a nice upward trending support line coming in from, well, probably it's not a trend line yet, it's only 2 points connected, but that's looking potentially coming in around about the 12,100 level. S&P overall we've still got this bearish channel on the weekly chart. We did trade outside of it last week and closed above it last week, so that's positive again. However, we do have this bullish channel that seems to be still intact and looking pretty decent. Support we've found just above the 4,000 level, 4,075, and prices reacting nicely off there at the moment, challenging resistance at 4,120. Next stop, 4,145 and 4,175 on the S&P. That's about it for the indices, unless anyone's wants to look at anything else in particular. If not, we can dive into guns ahead, getting through this nicely this morning.
We are, yeah. Let's do this. Maybe people are taking extended breaks from the Easter holidays.
No, don't blame them
for doing so. Okay, so guns and head trades. This is where Steve and I pick trades live on the stream. We've got a live account that we're doing this with. We've got £2,000 in it, which we started with at the start of 2023. Each of the trade ideas that we come up with must have stops and targets. They must have risk reward ratios better than 2 to 1. For the purpose of the challenge, we close these ideas off at 9 p.m. UK time, or when the stops or the targets are hit. And from a risk management perspective, we risk 1% of capital per trade. So we can actually follow how these trades are doing on our profile, signal_center. We can have a quick recap of trade ideas that we did last Thursday. So I was buying Euro Stocks 50. Looks as though it broken out of a wedge, potentially into a fifth wave higher on the hourly chart. If we click the play button, we can see I was on side at 9 o'clock by about 0.37R. So obviously has continued to move higher, which was nice. But for the purpose of the game, I made 0.37R on that. And Steve was trading gold again. He's made a habit of this lately, and it's been pretty successful for him so far. I don't think we had the same sort of success last week. Sadly, that was stopped out. Bit of a corrective pullback there on gold. But Steve's numbers of late mean that that doesn't really matter too much because he's absolutely smashed it. So Let's go again, Steve. What are you fancying today? Is it gold again?
It feels like it. We've let me look at the hourly chart. Obviously, that's the one from last week, so we get rid of that. That's the one from the weekly last week as well. So we've had this correction lower. We've ran into a bit of support, as you can see from this area of trading here. Bottomed out at 1981 very briefly, but really overall we've managed to stay generally above the 1986 level. Trading at $2,000, still feel we've got further to go on the upside. Last week's candle was pretty strong and decent, and we've already had a bit of a pullback to test almost the midpoint of last week's range and reacted higher. So overall, looking pretty positive. On the 4-hour chart, we still remain above the Ichimoku cloud, so that for me that's a positive. And yeah, why not go again? You know, we could say this is a little bit of a bottoming formation, a little bit of a gentle pullback. I don't mind having another go at this gold. Still think we've got good potential to test the all-time highs. It's just where how we manage this trade, trying to maybe put a stop in around about that 1988 level will give us over a 2-to-1 risk reward if we're targeting and move back to the highs. So why not on that? Indeed. So we've only got till 9 o'clock, so it's a bit of a big call, but we can go here, risk 1%. About 3 units it is. So let me see if that might come down a little bit. Yeah, certainly does. Might tighten the stop up a bit. Yeah, tighten the stop up to 1991. Gives us a 2.34 to 1. There we are. We're on it. We're on it and running. Stop is at 1990. Targeting a move to 2030. Just got in here at 2001.865.
Okay, good luck. I'm going to take a look at Aussie yen. Ali mentioned this on YouTube as well that he's watching, and I gave my thoughts on it from a daily perspective. I still think lower prices will be seen here. Ultimately, got this head and shoulders top, looking for a move down to 82.95 over the medium term. Looking at the intraday, though, it's quite interesting. On the hourly, we can see here that we've seen a deep pullback and then prices are rallying again, just overshot a 50% fib level, coming up close to a 61.8. Over the last hour, we posted a bit of a reversal candle there, a shooting star, followed by a negative looking candle over the last 24 minutes. So obviously we've still got to see that close as it looks at the minute to kind of confirm that bearish view. But also if we look at the automated Elliott wave count on the hourly chart, this looks quite interesting too. Suggests we've had 5 waves up and now we're in an ABC corrective move lower. So this is calling the kind of the B leg, if you like, or there's a sub count in there up to a C leg, which again should suggest a move lower. So I'd like to sell that market, Steve, which is about 88.91 on my charts, with a stop loss at 89.35.
Yeah.
Targeting a move down to 87.60.
Right, I have to repeat those levels for me, Joe. Selling it at market.
Stop 89.35.
And targeting a move to
87.60.
about just over 3 to 1.
Yep.
Okay, that's on, mate. We're in.
Okay, so we'll get those published up to our TradingView profile as well. If anybody wants to check them out throughout the day, feel free to do so. We just had a late request coming from Andrew on Aussie dollar, so I will take a quick look at that, Steve, before we move on to what to expect from the day ahead. So let's take a look at the daily on this first of all. It's been a pretty mixed bag on this one at the moment. So obviously we know that the dollar hasn't been performing particularly well, but the Aussie's not really been able to take advantage of that. So we did see a inverse head and shoulders formation complete here. back in October, November last year. Prices then moved very nicely to the upside before smashing into this big area of resistance here between 71.36 to 71.57. Prices then moved low within a wedge before breaking to the upside, then forming another kind of corrective wedge before then breaking to the downside. So pretty choppy stuff. I've got a band of support in here around 65.20 to 65.47. So that's kind of where I would like prices to maybe get to. This is also kind of the neckline of this previous head and shoulders, which may do a job. We've seen a break of this wedge. We are trying to post an engulfing candle as things stand at the moment, engulfing all of yesterday's losses, but obviously volumes would have been lower yesterday. It would help if I was showing my chart, wouldn't it? We still had Steve's on the screen. So this is what I'm talking about. This inverse head and shoulders back here between October and November. Big move up to the downside, massive level of resistance, corrected lower within a wedge, broke out of that, then formed another wedge before breaking down over the last few sessions. So this is kind of the area where I expect prices to get to, at which point I might be more interested in some long trades. But for now, we are trying to engulf yesterday's losses. We're rallying into the reverse side of this broken wedge. It would be interesting to see what sort of resistance, if any, is provided. But ultimately, I think my bias is for lower prices here on Aussie versus US dollar. Okay, let's move on to the day ahead then. So not much to be concerned about. Quite an easy start to the week today. So we've got the Eurozone Centix index, which is due out in just over an hour's time. And then this week we have some important numbers. We have the US consumer prices tomorrow, the CPI number, which is all important. This has pretty much been the biggest market moving data point around at the moment. Obviously, non-farm payrolls is typically in charge of that title, but CPI has been very well watched. We've also got a Bank of Canada policy decision tomorrow, as well as Federal Reserve minutes. So tomorrow is really the main day of the week that we need to be concerned with, because there's lots of data points out which could be potentially market moving. So brace yourself for that. But today, only really the Eurozone Centix index is going to move the dial on some of these major markets. Okay, right. I think we can leave it there, Steve.
Yeah, nice one. Nice quick start to the week, and hopefully, we'll see some decent price action this week.
Indeed. Have a great day, everybody. See you tomorrow. Bye bye.
Cheers all. Bye.